All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. This is episode number 190. It is going to be a very special episode because we are going to be recapping our thoughts on Q4 2024 earnings. The stock has surpassed $100 a share and $250 billion in market cap. And so there's a lot to discuss when it comes to numbers, analyzing how people are feeling, valuation. There's just a lot we got to get into today. This is going to be one of the more special episodes of Palantir Weekly. We started this podcast when the stock was about $12, continued doing the podcast when the stock was $6, and now we're here at 100. It is absolutely incredible. So we got a lot to break down. Matt, Money, Arnie, Amir, thank you for being with me here today. How are you guys doing?
Doing fantastic, Amit.
Arnie, how about you?
We surpassed our own best expectations. So how can we bad?
Matt,
how
Money,
can we
how are you?
Oh, it's a good day. Had a good week. It was a good day.
All right, so let's get into it. I'm going to start off with a very simple, basic question. Thank you for everybody being here in the chat. And for the OGs that have been here for a long time, congratulations. It has been a special, special week. And it's exciting to be here on this journey right now. Let's start with you, Arnie. What are your raw thoughts before we get into all the numbers and nitty-gritty stuff? Palantir, $250 billion, $100 stock. How are you feeling?
Great. And let me tell you, how true is prepare for the worst, but be exposed to the best. And I think that's how I personally approached the earnings, but I'm sure I was not the only one. We were discussing a lot about what could have potentially gone wrong because the valuation was already implying good expectations. And I don't want to bother you with that because we discussed it like very, very, very much. We discussed very much also the SaaS component, which I saw as the potential weak spot, to the point that I woke up this morning and I noticed a guy commented my video explaining like the risk of a SaaS and, oh, your analysis sucks. And it's like, well, actually, our analysis was correct on underscoring this is a potential real risk, a risk that Karp essentially managed from the beginning, explaining what was going on, because the reality is people, apart from a couple of analysts, didn't really wake up on that. So when a management talks already like in advance of the stuff that could piss off analysts rather than, oh, I didn't expect this, is always better, is like a damage control. And on top of this damage control, I think they made literally the impossible. Impossible that sort of exceeded literally even the most rosy expectations from the most bulls, because we were saying, guys, but if we're already guiding good revenue growth, we're already guiding this high free cash flow margin, I don't think they are going to disappoint there. But they didn't disappoint. Like they completely smashed their guidance at a certain point, like at that point where literally it's like talking to another company compared with what we were discussing a couple of years ago. We were there hoping for an acceleration towards 30%, and now is like 30%. Okay, that's the baseline. So before we go deeper into the numbers, I would say just, wow, this is the Palantir that I wished I would have seen 2 years ago when I was loading the boat very heavily. And now it's really happening.
Matt, Money, your raw thoughts on this week and on earnings?
Interesting. Didn't expect this much of a run, obviously. And I've been dragged through the mud, obviously, over the past week or so. Regardless of whether or not Amit thinks that a lot of people agree with me, that it's not the case in a lot of the comment sections. So there's that. But with Stride, I'm still okay. I still have all my shares. And so with that, we're having a good week.
All right. And Amir, your raw thoughts on this week's earnings?
You know, I've been saying for a couple of weeklies now that I believe that it was really a pivotal quarter for Palantir. Like a lot needed to happen, if not this quarter, then early on in 2025. And I got a lot of answers to like the few concerns I might have had for Palantir. And I think I got a lot of clarity from this quarter. So it was very important from that aspect. And if you recall, during the earnings stream that we had, I jokingly said, what do you expect that the stock can do in case of like a blowout quarter? Like no one was really expecting it. Like we were all like tempering our expectations. We were like, yeah, more or less aligned that we will see something like 31% growth. And then we got this blowout quarter, and Amit actually said, yeah, I believe maybe we can go to like 90. And then it blew past that all the way into the triple digits. And now I don't even know where we're trading now. I'm not really looking, but that was crazy. So, yeah, very special quarter. Yeah, special quarter, special commentary from Carp. He got emotional. Many of the investor base got emotional, like life-changing money for a lot of people. Congratulations to all of you. And from the numbers side, it was very important as well. So, yeah.
I love it. So I want to get into the I think we'll do numbers first and then valuation later. I know there's a lot of talk about valuation. We'll get into all that, but I think we should probably spend a good 20, 25 minutes on numbers, and then we'll do valuation. First of all, thank you everybody for being here and being part of the weekly. Before we get into numbers, I do want to play what Amir just talked about, which was Alex Karp's closing message to the investors that believed when no one else believed. Let's take a listen to that, and then we'll get into these numbers.
Thank you all. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're doing it. We're doing it. And I'm sure you're enjoying this as much as I am. Let's not talk to analysts about the burden of being right, our burdens of investing in ontology, our burdens of actually looking at the math, the burden of reading what the rule of 40 is, the burden of being honest about what an enterprise software company is, or the burden of explaining to your friends that you're really happy. Maybe we should just stop talking about it. I'm very happy to have you along for the journey, and you are partners for us. Every Palantirian, we are crushing it. Everyone else who's listening, we are dedicating our company. We have dedicated our company to the service of the West and the United States of America, and we're super proud of the role we play, especially in places we can't talk about. And we love our success in the U.S. and globally. Also, we are doing in the United Kingdom and many other places. Palantir is here to disrupt and make the institutions we partner with the very best in the world, and when it's necessary, to scare enemies and on occasion kill them. And we hope you're in favor of that. We hope you're enjoying being a partner, and we're really happy and very, very focused on what we're doing. Thank you for your time.
Thank you. That concludes Q&A for today's call.
Before we get into numbers, just some raw reactions to that, because that obviously was an emotional moment. Amir, any thoughts on that?
I'm trying to recall what I said, like at the moment. Of course, now it's all like cooled down, but I believe like, yeah, it really felt like he was talking directly to me, to us, to everyone in the chat that's been along and been studying this company for so long, to actually finally be rewarded. Like it felt like he was really speaking to all of us straight to our hearts. So at the time, I think it was quite emotional. Now, back to as Arnie likes to call it, psycho mode investing. So now it's not the same, but yeah, it was really special the moment we heard it. And even like I think the first emotional moment was actually when he was answering Dan Ives like pretty basic question, and he went on for like really long talking, and then towards the end you could actually see him like start to tear up and stuff. So I think that was the start of it all. So very magical moment.
Arnie?
We are talking a man that essentially already achieved the impossible. So when he was saying, we are doing it, it goes way, way beyond oh yeah, we are making billions. And it's not only we as the company, is we, including all of us that were truly investors, but not only monetarily wise, like a true investors into, we believe that this mission has a sense, and despite all the criticism, despite all hate, or despite all you can't scale, you're a consultancy, all blah blah blah, we are doing it. Like, we are killing all these bad stigmas that people are putting on us, and we are winning. So I'm super happy. I think this is well, we have seen occasionally Carp very happy, very angry. Like, I love when Carp goes emotional, because that tells you there's some man, a real man behind the CEO. And probably this has been like the highest level of joy from Carp. We have been ditched for 20 years, and now we are making it.
Yeah, I agree. I'll give my thoughts, and then I'll hand it over to Matt. I think Rick said it right here in the chat that that's 22 years of hard work, blood, sweat, and tears, constant rejection to get to this point. When he said we're doing it, to me it was just, as you said, Amir, him talking to the retail base, that he knows, when the stock was $6, there was only us that were actually making content, caring about the company, and now Bloomberg and CNBC care, but that's after it happened. And I think one thing about Carp is that he cares about loyalty. He cares about people that actually believe in the mission. That's why Palantir's turn rate is so low compared to other tech companies. And at that moment, I think it was just pure joy, because, what is the journey of life? The journey of life is to actually try to do something against the odds. I mean, or that's like one of the more special journeys of life, right? When you try to do something when the world says you can't, and then you pull it off. And this quarter, 36% year-over-year growth. I mean, that's not a baby number. We all expected on the high end, maybe 31%, then guiding for 30%. Adjusted operating margins went up 7% quarter over quarter. Like, when he says we're doing it, we are doing it. Now, how the street's choosing to value that, we'll talk about from a valuation perspective, but no one can say Palantir is not a growth company. No one can say they're not actually doing what they said they would do. And I think those were raw emotions from Carp to the retail investor base, because there was only us that believed 2 years ago that they would actually be able to pull it off. Most people thought this was not going to happen, but it's happening. So I thought it was special. I thought it was emotional. I got a lot of screenshots over the week of people that literally have made life-changing amounts of money. And it's one of those things where you look back and you're like, wow, this was a once-in-a-lifetime company, and they're actually doing it right here. And there was a lot of emotions from Carp in that statement. Matt, your thoughts on Carp's closing message to retail?
I've always thought that Carp was a really good leader, and I think he's a true reason as to why Palantir has been successful in solving such big problems and why they've been such a controversy across the globe. And I think he's one of the main reasons why the company has such strong values and is getting sort of the valuation that it has, right? Everyone can see the brand. Everyone can see what they stand for, and they're not wavering from that. And I think that a lot of that has to do with Carp and his notes to the retail shareholders, wasn't necessarily just to us as retail, but also the people within the organization, to show, hey, we're not wavering from what we believe in. People are starting to find to believe in us now. So in that respect, has been really good. And I can't fault him for what he said whatsoever. And it's nice to see the fact that he's able to get a little bit of fruits from his labor, which has obviously been evident over the past 20 years.
Yeah, and it was nice to see some real emotion. I was seeing some takes on Twitter over the week of people saying the call was cringe or whatever. CNBC was like he was talking way too much to retail versus institutional.
We need more of that. We need more of it. I was literally just listening to SoFi Weekly about how Anthony Noto is some robot military guy who refuses to talk to shareholders. He refuses to, and I agree 100%. Like, it shows courage to reach out to not just the Vanguard, State Streets of the world, but to all your shareholders, right? Because at the end of the day, if you're not listening to your customers, you're not listening to the future of the world, then you're just going to falter. Why listen to State Street and BlackRock? They're the ones that have the money. They're not the ones that are on the ground making the consumer decisions. They're the ones that just own a bunch of stock in a bunch of different companies, versus the people that are in Palantir and the ones that are the reason why the stock price is so high, because they refuse to sell. And institutions are trying to buy in. They're the people and the reason why the stock price is over $100 today.
Yeah, and real quick to that point, Brent Thill from Jefferies on CNBC 2 days ago said Carp doesn't respond to institutional emails or whatever. It sounded like he was like upset about it. And I'm like, maybe because the institutional analysts are used to being wined and dined for their price targets to be raised, and Karp wasn't playing that shit. He was going to prove to the world that they had a real product, and if you believed, you believed. And I think that's why it was so emotional to him as well.
I was going to underscore exactly that. As someone who worked in the financial industry, obviously not like a Wall Street, like it was like the light version, okay? But I saw the dynamics, and the dynamics is when you are in the institutional world, you think you are cool and sort of entitled to speak with companies, especially if you are from one of the leading banks. And when you see the CEO of the management actually giving credits, like talking to retail, which typically you as a finance guy is like, oh, these dumb retails, blah, blah, blah. And realizing, whoa, like actually the retail people got it right. That is something that really shakes the confidence of these high ego, low confidence professionals, because they believe they know the stuff. And if stupid retails actually are able to get where they were supposed to do, it's like they feel useless without really realizing that at the end of the day, the institutional money world means nothing without retail. Like they are there to actually serve the retail world, because even the pensions fund, the investment funds, like they're mostly held at the end of the day by people.
Yeah, and the other.
Oh, sorry.
I was just gonna say real quick, the like Jefferies charges an arm and a leg for their institutional research to their clients. So if you're paying hundreds of thousands of dollars for this research, and the research said don't buy it, it's worth $28, and then the thing's at freaking 115, it definitely hurts the analyst's credibility. Go ahead, Amir.
No, I was just gonna say, like, we are really seeing the capitulation of Wall Street, like, in full effect. Like prior to the earnings, if you recall, Keith Weiss, which was like a long time bear as well from Morgan Stanley, he was demoted, and then they got a new analyst that took the reins on Palantir. Like, no, like we are done losing so much money on your poor calls on Palantir. Like, I'm sure some clients were pretty upset, and that's why they made the drastic decision. Like, seldomly will someone be demoted if they have like main coverage for a company on Wall Street. So that was like the first sign that, oh my God, like they had to raise the price target from, I think, 28, more than doubled it. And then now they again like raised it again by a lot. I think they're up, like we're talking about Morgan Stanley here. I think they're up to like 90 plus now. Same with what you mentioned, Brent Steele. He went on CNBC just like minutes before the earnings call. He's like, yeah, this makes no sense. This is in all my 20, 30 years on Wall Street, I've never seen this sustainable. It's never going to work. After the earnings call, he's like, okay, we're raising our price targets as well to 90. Like everyone is starting to capitulate. Even what's the bear that had like a $9 price target? Rishi also raised. Rishi also raised to like 40 at least, but that's like 4x. So we're seeing Wall Street capitulation like on full blast now, and they're like panicking, like, oh my God, we missed out. We can't look like idiots with like price targets of 9 when the stock is trading like more than 10x that. So they're all starting to raise, but the question then becomes like, okay, which one of these is actually well grounded and understands the business? Because I made a long stream, like 1 hour, where I went through the Morgan Stanley report after they demoted Keith Weiss, and this Sanjit is the new main analyst. He's like, yeah, we're raising our price targets. We got this wrong. I was like, okay, did you really get it wrong? I read through the whole report. There's no reference at all to understanding Palantir. Like that whole report is only talking about price to sales and comparing it to different companies in the SaaS world. Nowhere in the whole report, despite like demoting Keith Weiss, do they actually talk about Palantir's products, how they're differentiated, how they're going to capture the market, the mission statement, like nothing. Like they really still don't understand it. So it's going to be interesting to find out the coming months, quarters, like which of the Wall Street analysts will really like reset, like, okay, we were wrong. Why were we wrong? And try to actually understand the business, because so far it's still only Mariana, the UBS report, and then Ives. I mean, 3.
Yeah. We did get a lot of Palantir price target upgrades today or over the week, which we'll talk about as well.
Can I show you something very little?
You want to play the clip from
No,
Brett?
no. Just I want you to see like you can see the disappointment from this analyst from Jeffries from his faces already from 1 year ago. This was 1 year ago, 3 months ago. And now he's making this round of CNBC interviews. Essentially, I was wrong, but it's overvalued. Trust me.
Dude, scroll down. The one with him and Dan Ives got 100,000 views. Wow. That's damn, dude. That's. I mean,
Look at the frown. Like, what the?
no,
Look at
CNBC
the frown.
definitely made that thumbnail on purpose, bro. They knew what they were doing. They knew what they were doing.
No.
That's really telling. That tells you the difference between how you should reason in tech. And to be honest, I was quite aggressive when I first interacted with Dan Ives because I was more like grounded into the numbers, and I didn't fully appreciate the way he put out a valuation. But I have to admit, well, maybe he's too extreme for my side, but he puts weight on the dynamics that matter. While this guy from Jeffries, overall is a good analyst. I don't disagree with that. But it's too anchored to the numbers without really understanding the dynamics of the numbers, which in tech is literally the most important thing. When you evaluate an utility company, it's almost all about numbers. Like you don't expect crazy things, you don't expect challenges. But if you want to understand the future of something that is really evolving, you need to know the dynamics. It's like knowing, okay, if I have the ontology of the business, I can actually understand the dynamics of the business. I can go way beyond the Excel spreadsheet because by understanding the dynamics, I know what are the inputs that generate the output. Therefore, I have a predictive power. So that's the big learning I have.
You know, imagine the fear now on Wall Street, because in aggregate, Palantir is not really, it doesn't really have very wide coverage. Like there are very few analysts relative to the market cap now. I think we're not even up to like 20 active ones. I think we're at like 15 or so. So imagine being like, people will have to cover this now. Imagine the fear in the conventional analyst's eyes when they get assigned, yeah, you're gonna cover Palantir for us, and they're like, oh my god, like career destroyer, like you get this wrong, like you are smoked. Like imagine the fear in the analyst community these days. Like, yeah, you have to cover Palantir. Amazing. Yeah. As Karp says, and has been saying in his remarks towards analysts, like this is gonna be fun times for us.
I've been trying to find the clip. I can't find it. Amir, maybe one of you, hopefully one of you guys in the chat can find it. Where is the clip where Karp said, why do I care about what the analysts are going to say? I know what they're going to say in 2 years.
I think it was Davos, CNBC 2023.
Okay.
They're outside. He's talking to the CNBC guy. I forgot his name on CNBC, but yeah, it was Davos, I believe.
Okay, I've been trying to find it. I want to get that clip for everybody again because that's a fun one to watch right now. All right, so let's get into the numbers. We got a lot of stuff to walk through, and then we'll get into valuation, which I know is a big topic of discussion. But numbers were nothing short of incredible. I mean, we got these numbers on Monday, and I don't think anyone expected them to be this good. There was so much hoopla about Palantir not releasing any PRs in January, and people were like, why are they so quiet? That's because they were closing deals, and they really didn't have to show off their deals because the numbers do the talking. U.S. revenue, 52% year over year. Commercial revenue, 64%. Government revenue in the U.S., 45%. Top line revenue, 36%. 14% quarter over quarter, $828 million. We are getting very close to Palantir putting up billion-dollar revenue quarters, which is incredible. They closed about 129 deals of at least $1 million, record-setting $803 million in U.S. commercial total contract value. Customer count was up 43% year over year, 13% quarter over quarter, which actually increased from the decline we saw last quarter when it went up only 6% compared to 7% from 2 quarters before. So that was a dramatic increase as well. GAAP net income, 79 million. It would have been 165 if not for the SARS expense. So the SARS stuff we were talking about, it ended up being a concern, but not enough because their margins were good enough to still produce enough of a profit to not be able to miss on EPS. Rule of 40, 81%. Carp made a joke about how Rule of 40 should be called Rule of 80 now because Palantir is changing the game when it comes to Rule of 40s. And then they have 5.2 billion in cash, no debt. For 2025, they are guiding for 31% growth and revenue of 3.7 to 3.75 billion. For Q1, they're expecting 858 to 862 million and about 2 billion of adjusted free cash flow towards the end of 2025. We'll talk about if we think they're sandbagging and what those projections ultimately look like. The headline of this quarter was Palantir reports Q4 2024 revenue growth of 36% year over year, 52% in the United States, issues full year 2025 guidance of 31%, eviscerating consensus estimates. The fact that Palantir put that in the title is just, it's cool, right? They're doing it their way and they really don't care about what anyone has to say. Real quick, the quote from Carp at the beginning of the PR. Our business results continue to astound, demonstrating our deepening position at the center of the AI revolution. Our early insights surrounding the commoditization of LLMs have evolved from theory to fact. I would also like to congratulate Palantirians for their extraordinary contributions to our growth. They have earned every bit of the company's or of the compensation from the delivery of their market vesting stock appreciation rights, aka SARS, which ended up not being a concern in terms of the stock's reaction. Let's start with you, Arnie. Your reaction to the numbers and any specific metrics that you want to go over.
You know, I insisted a lot, actually for quite some time, about this concept of the Rule of 40, when people were not still really considering Palantir as a SaaS component, as a SaaS company. As a matter of fact, Bessemer, who has this fancy website with all the SaaS companies like ranked, digested in all possible metrics, actually was not considering Palantir at all. Maybe still doesn't because it seems they hate them. But when we actually compare Palantir, what it is doing compared with all the rest of the industry, we noticed something very peculiar, something that we started to underscore already months ago, that while the industry was still in a trouble after a very, very prolonged, like they had a peak in 2020, 2021 when money was easy and people were just spending too much on software. But then the period of rationality, the period of efficiency, like all these startups that and software companies that went too fat just to grow, realized, okay, we actually need to deliver profits. So you see the SaaS industry, this is for until June, but the trend actually is exactly the same in the updated numbers. We're just, okay, the revenue growth is slowing down, the margins are going up, but that came exactly with a sort of a sacrifice. You can't really grow more if you spend less, if your business works linearly. But wait a second, Palantir actually did that, and it did it in the most beautiful way. Essentially, since the launch of AIP, it disrupted its own business model. That was due mainly with bootcamps, but that also helped all the motion, all the network effects to actually start to trigger. And what we are seeing here is literally the definition of black magic. Palantir raised the revenue growth from around 15% to 35%, even more if we exclude the SPACs. And meanwhile, expanding the margins to a level that is frankly obscene with 45% or more or less free cash flow margin, which means Palantir is not only growing very fast, essentially faster than all the other SaaS companies of similar size, but doing that while also printing money. That's the definition of black magic, which I think is the underlying pillars with which we should now consider the valuation, because without understanding these, all the valuation talks are just useless. I had the honor to help Only CFO, who has a very good newsletter on SaaS, explaining, okay, this dynamics really matters. And if you understand this dynamic, you realize how analysts made essentially the same mistakes that they were making when they were analyzing Palantir in 2022, essentially expecting Palantir to just grow 20% while having margins that were still low. Actually, we saw this dynamic, but multiplied by a factor of 10.
I don't even think it was that. I think it was the fact that back in 2022, they were like, oh, this company doesn't even make money. When you clearly look at the adjusted cash flow, they were adding cash to the balance sheet. And it was like just complete nonsense why people weren't thinking about it back then. But the thing that, sorry, I know I'm just jumping in here, but the thing that I think made me most inspired was actually going back to the Friday before. So I guess literally a week ago when Amir said, I think we'll get to, I think he said it was like 11 or something % year or quarter over quarter growth. And I said, Amir, you're smoking some crazy European stuff over there, because we haven't seen that since, I don't know, it was like the third quarter or fourth quarter of 2021. And here we are, 14% quarter over quarter. Like, how insane is that? That wasn't just that matching what showed up in 2021 or 2022 as the quarter over quarter growth. It surpassed it by literally a huge margin. And to see that, in one single quarter, that massive jump was insane. I think what it was I think Amir was projecting 800 million. And I was like, that's 75 million than last quarter. That's insane. It's literally 10%. And what we showed up with was 14% quarter over quarter. Absolutely insanity.
Yeah, I think relating to that, the most important aspect is actually how well they are monetizing the current clients. The 20% out of the 36 actually came from existing clients, which is why it's so important. I mean, one of the main concerns that I had was the slowdown in the customer account growth going into this quarter, because customers are the core driver of that scaling mechanism that Palantir has. And I was really glad to see that customer account growth accelerate like massively, like all-time high net additions of customers, like a real acceleration. Because as you just mentioned, it's hard to imagine new clients contributing that amount of growth. Like, you need the current clients to actually keep scaling up, keep spending more. And that's what we're starting to see. And I mean, as Arnie mentioned, after the launch of AIP, at the end of Q1, it took about to Q2 or Q3. No matter what metric you pull up for Palantir, if you chart out this KPI or that KPI, this growth rate, this growth, everything pivots as soon as AIP launched. Like, you will see it on every chart. At Q3 or Q2 or Q3 of 2023, everything just starts going up and to the right. Like, it's really magical how boot camps that go to market change everything. And we're seeing, like, I've looked at a lot of businesses. I've probably never seen, if we're talking quality of growth, like, a lot of businesses can grow a lot, but growing a lot while also massively improving margins, very, very rare. And I think that's one of the reasons that a lot of people are getting excited to own Palantir. So quality of growth can commonly be measured with the rule of 40, as we talked about. And yeah, score of 81 is just absolutely, like, as Carp says, it's almost unheard of. Like, it is completely crazy. But also, like, sales efficiency, like customer acquisition costs, all-time low. Time to pay back that customer acquisition costs, all-time low. Like, it's just such a pivotal quarter. And when I look at, like, okay, is this growth sustainable? Will the growth slow down? And when we look at the contract balances, they are at all-time high, like total contract value, remaining deal value, RPO, everything is just at all-time highs. There's not really anything that is suggesting that Palantir will slow down growth. And we talked about it, like, okay, the stock price, pretty elevated. What does Palantir need to do in order to keep the momentum? And yeah, just keep accelerating. And from the numbers itself, I'm not really seeing anything that's suggesting that they won't keep accelerating from here. So it's really, as Arnie mentioned, like black magic, just to see how important that AIP launch was and the bootcamp go-to-market strategy, because it's just so efficient in terms of sales, and it's just so high quality in terms of growth. So even looking, if we exclude SPACs and just look at organic growth, they grew 39% year over year and over 30% for 3 quarters in a row already. Like, people are talking like, yeah, I want to see Palantir grow at 30%. Like, they've been doing that for 3 quarters. If you just exclude SPACs, which is inorganic, like the actual core business for Palantir has been growing at that rate for quite a while now. So it's just a magical quarter in terms of the actual numbers. There is only, like, the only thing that I can find that is a concern to me still is in international. Corp addressed it on the earnings call. And if you go back from the very first earnings call, I've said this a bunch of times, so I'm like a broken record. Since the first earnings call, he has nagged on Europe. The management has been critical of Europe, and that Europe is not adapting. In about 80% of all the earnings calls Palantir has ever had, they have been criticizing Europe. And I don't know when that change is going to come. For now, the US has plenty of growth for Palantir. Like, Europe is not such a concern at this stage. It might even be years before we actually need to see meaningful contribution from Europe. But yeah, it's been flat for a very long time. So if you are to point out like one single thing that's not amazing, it would be international growth, and mainly that's due to Europe. So outside of that, everything is just fantastic, like honestly fantastic.
Yeah, I agree. Arnie, go ahead.
No, it's not that international is not really growing, but is really growing at a disappointing rate compared with what it could potentially be, especially on the commercial side. Because on the government side, we talked about the expansions, for instance, in the UK, which is going very well. I know something good is going to arrive in terms of deepening into the understanding there. But for instance, you can see here in the commercial, like the difference between international commercial clients and revenues. You see the revenues are more or less stuck, but at least we're getting many customers in terms of international commerce. But look, compare this that we are seeing right now on the screen with US commercial. Like, it's literally black and white.
Yeah.
You see both their revenues and the commercial clients expanding. And what's really staggering is realizing, wait a second, yes, the commercial revenues are growing very, very fast, now above 50% for many quarters. But look at the growth of clients. Here we are talking of big clients that haven't fully scaled yet. So this is the intuition that we discussed many times here at Palantir Weekly. So kudos to us that, hey, wait a second. If the number of customers, especially in the US commercial, which is the most lucrative market, is growing way faster than the revenues, it only means it is a matter of time before we will see that dynamic also becoming revenues. Because when you start dealing with Palantir, you don't buy a subscription that you pay that amount for the rest of your life. You tend to start slow. To acquire the client, they need to start relatively small, tackling a critical issue. But then as confidence builds up, you can spend more. The more use cases you solve, the more you realize, oh shit, like I can deploy this not only to this department, to these use cases, I can deploy this full scale across my enterprise. And that's where the real magic happens. So until we see these US commercial clients growing and growing very healthily, we know there is all this future substance in terms of revenues that is going to come.
Yeah, I think there's two things here, and then I'll give it to Matt and see what numbers he liked the most from earnings. Number one, as Connor says right in their chat, Palantir hasn't even gone down market yet, right? And so we have 700 customers. One day we're going to have thousands and thousands of customers. Probably those thousands are going to also come from going down market. So when that happens, that's going to be a game changer. Number two, in terms of international revenues, like, what is Germany going to do for the next 10 years? Are they just not going to grow? Are we going to have GDP at 0%? Negative? Like, is that actually, because if that's not going to happen and we assume that Europe actually gets their shit together, that's going to be a tailwind for Palantir. And if it's going to be a tailwind for Palantir, or at least tech companies in general that are creating some level of transformation in the enterprise on that continent, you would imagine there's a handful of them that are actually going to catch that bid. And if one of them ends up being Palantir, that's something the analysts definitely haven't thought about. And when we see that inflection point, that might also be very exciting when it comes to growth long term.
You know, ironically, the forecast for the European area economic growth is actually 0%. They came in at 0.8 last year, and it's projected to slow down even further. So, unironically, like it's that bad, and they will have to wake up. I think, like. All credit to the 47th president. I think he's doing a great job cleaning up and exposing some of the inner workings. And I think that might start to come and affect Europe. I know Italy, that Arne is from, is doing some like major criticism towards how things are going. I think that's spreading. So sooner or later, I do hope that we get a reinvigorated Europe that actually makes away with like attaching bottle caps to the bottle and like these stupid things, these massive regulations of everything, and actually like starts to foster some real growth and some real innovation again, as they have been historically. So that time might be coming. I wouldn't count on it too soon though.
Look, consider that we have been not growing for so long that it's like when you buy a company and it just goes down or stays flat forever, like ask Baba investors. Like you start losing hope. And once you start losing hope, as a company, as a country, it is really hard to make that motion again. It's still possible, but you need to be really inspired, to be very united into, okay, we are going to change how things work. And the very cool thing is Italy, but Europe in general, I think we are not stupid, but we lack that emotional confidence into we can make it, that is actually very strong in the US. And typically, if we see the US makes it right, initially we are not, but then when you realize, okay, it's a matter of survival for your own stake, okay, let's move on. Let's try to do something. So I think that's the play also Palantir is making. Okay, rather than trying to beg these European companies, please adopt Palantir. You actually need this to become competitive or to stay competitive in the marketplace. Okay, we will show you how people that really care about investing in innovation do. And as Karp always says, we don't need to convince you. We provide you the evidence, you convince yourself. I think that's the reason why it's like, okay, I tried my best to try to trigger you, not really working. We will focus on into companies that really care of investing in this stuff, because this stuff works. And once you will see it works, then you will convince yourself.
Yeah, I agree. And someone says, Amit, would it make sense for NATO to be on the same military platform as the US? Do you think that's a possibility? I think a lot of the NATO countries are in play to catch a bid, or for Palantir to catch a bid from them, especially with increased defense spending. I think the Pentagon announced today, or Trump, or one of the people in that inner circle said that military spending is up another 150 billion this year, something along that line, or over the next couple of years, which means there's going to be more money spent on defense. And Trump wants, as per his Davos speech, NATO countries to spend about 5% of their GDP on defense. And so if that happens, you would imagine Palantir gets some leverage there. One final stat from my side is operating margins. I thought this was exceptional, dude. 38% last quarter to 45%. I mean, what do you say? 7% quarter over quarter. If that can get to 50 to 55%, even if top line growth is not 40, 45%, we are going to see a lot more net income and earnings growth on Palantir by just them being more efficient and doing this with less than 4,000 employees.
Yeah, I think this is one of the major. Oh, sorry. Go ahead, Matt. I saw.
No, it's okay. Just didn't want to interrupt you guys. The thing that I was most excited about was comparable to what Amit just pointed out, which is the cash flow margin. I think that continues to be something that cycles between like mid 20s and now 50 something percent plus that we've seen in this quarter. So it just goes to show how much of a cash engine this thing can really be. And, you know, it depends. We're always going to have the issue with share-based compensation. Google has it. Many other companies have it. You know, it's not something that's going to go away. But with such a nice, I guess, cash flow contribution every single month or every single quarter, you could utilize that to offset that. And then not only that, but then some, invest into other things like Shield AI and things of the like. So to me, while I've been critical about the share-based compensation, the dilution, things of the like, I do want to see that capital frame be shifted more towards the SPACs investment. I think it was still, while I recognize where people may have thought that the SPAC investments in 2021 were a mistake, I'm more on the lines of if they just adjusted it to be more of like in line with 10% or 15% of cash to the balance sheet, I don't think they would have gotten themselves in as much trouble. And so I think that if they do continue to do something like that, now that we're going to be throwing off over $1 billion a year in cash to the balance sheet, you know, using 150, 200 million of that on an annual basis to invest in innovative things that could grow, like Waymo and Wejo, like all those things that showed up that were really not Waymo, I meant Wejo, and many of the other things that like Lilium and many other companies that they invested in, Black Sky, etc. It allows them to get a head start on these innovative solutions and come up with more long-term software things like Warp Speed, right? And to me, that's where the moat is going into the future, is understanding what the software solution is for AI, understanding what the software solution is for electric cars or automated cars, understanding what the solution is for a lot of different industries, and then figuring out if you can package it. To be honest, I'm surprised they haven't fully unleashed a software specifically for healthcare. While I know that they have many of the beds in the United States, I'm surprised they don't have something like Health AI or something like that they branded, kind of like what they've done with Warp Speed. Maybe they're perfecting it. Maybe people want to do their own, what's the word I'm saying, disparate solution at each hospital. Who knows what specifically and what reason, but I'm surprised I haven't packaged that up, knowing that they already support probably at this point over a quarter of the beds in the nation, at least in the US.
Yeah, I can share just quickly about the dilution that is becoming less and less of an issue, actually. This is the outstanding expenses related to, now we don't have the final Q4 numbers yet. The 10K is not out. Come on, Palantir, put out the 10K. But if you look annually at outstanding SPC expenses, it's been going down. Now, of course, we don't have like these are the same, but I expect that to keep going down. And that can also be seen if you look at SPC. Now, of course, we got the SARS expense here, but as a percentage of revenue, we were down to like 19, 20-ish per quarter, which actually, if you compare to the whole SaaS world, Palantir is actually giving out less SPC on a percentage basis than the average. I made the calculation that including like 15 to 20 SaaS businesses, the average is actually somewhere around 24% of revenue goes towards SPC, and Palantir has been at 20. It's going down. Like if we look at the outstanding expenses, it's also been going down. Now, of course, they can issue new packages and stuff, which we saw in 2024. But like on an overall basis, it's really going down percentage-wise now. Of course, the SARS skewed all of that for this particular instance, but it's not as bad as people make it out to be. If you recall, going back like even a couple of quarters or even a year, all the craze was about, oh my God, Palantir's dilution. It's so crazy. They are SPC up the wazoo, and I'm like, it's not actually as bad as you might think. Now, 20%, of course, high, but within the industry, they're actually below the average. I think the best ones are very old businesses, like an Oracle, for example.
Mm-hmm.
But if you look at these like similarly growing businesses, like ServiceNow is the best at like 14, 15%. And if Palantir can get to that 15%, I would think that that's all right, and I think it's headed that way within the next couple of years.
I was curious, who else is in the cohort, right? Are you comparing to like C3 AI and and some of the other smaller companies that are kind of more in their infancy? Or
Yes, C3 AI will skew the results a lot because it's over 50% for them, but they are included. Yeah, I try to weigh it by. It's hard to weigh by market cap because some of these are tiny. But yeah, Datadog, Salesforce, ServiceNow, Snowflake, C3 AI, and a bunch of like different SaaS businesses, basically.
The reason why I ask is because if we want to be rated and valued like the big boys at 250 billion, like Cisco and Salesforce and the like, then share-based compensation should reflect that, and not reflect that of what C3 AI is. And I recognize that part of that is skewed due to the fact that we are early in the journey and still have low revenues comparatively to those companies. But the goal should be to eventually get to that point. And I anticipate that is the point, and where we will eventually get towards an asymptote of where we land with respect to share-based compensation. But my hope is that I'm okay if they, issue at the moment 20% and it drops to 15 over the next few years. But having $5 billion on the balance sheet with not doing anything with it is what's bothering me. And I know, I bang it to death, but I'd be curious to see if they up their, what was it, $20 million of share buybacks this quarter, or 64 for the entirety of the year, if they grow that closer to 150 million. Because if you think about it, that was 6% of the entire ops cash that they generated throughout the entire year, assuming they generated about $1 billion. I think that's about where we ended up for the year. So if that's the case, we only bought back 6% of what we generated. To me, that's a low number. And with low capex, like 1 to 2%, I think is what our capex value is. That means we have only really spent 8% of what we brought in terms of cash. I recognize that we're still in a place where, with respect to SBC and what happened with the SARS, if we were, I guess, a little bit more aggressive with spending our cash, we might not have been able to be to a point where we were GAAP profitable this quarter, because we wouldn't have had the interest income to potentially offset some of it. But either way, I'm looking forward to, as the company matures, as it gets to 5 billion, 6 billion in revenue, and that 1 billion in ops cash per annum turns into 1.5 to 2 billion. Really, where are they going to deploy that? Because you can't just dilute shareholders to kingdom come, right? I mean, you diluted shareholders by over 7% in the last 12 months. Meanwhile, you're just stacking cash and being able to sell shares. It kind of doesn't have the best look. Granted, I'm giving them grace, right? Because it's only been 4 years since they direct listed. But if they want to be treated like the big boys, $250 billion market cap and beyond, and get that sort of valuation, they need to treat the shareholders that way.
So I think let's transition the discussion there. And Arnie, I'll start with you on this one. Valuation, obviously, this is a really hot topic this month. Palantir is $250 billion in market cap. It is the 40th largest company in the United States of America. We are larger than Cisco, Alibaba, Samsung, Accenture, Toyota, IBM, Morgan Stanley, Merck, GE. I mean, it goes on and on. McDonald's, Disney, like, we're up there in terms of valuation. I think everyone acknowledges that this is an extended valuation. Also, everyone acknowledges that we have no idea how what this is happening, but it is happening. So Arnie, I'll give it to you. What is your take on valuation? Are you scared about valuation? Do you think there's going to be a massive correction, or do you think this is the result of 20 years of blood, sweat, and tears, and now Palantir is being rewarded for it?
That's the question of a question. It's tough. It's tough because, as we mentioned previously, we are not talking about an utility, but an organic creature that actually grows very fast. And the more it grows, paradoxically, the more it can grow, thanks to the network effects. That is something that people tend to underestimate. And that is true in general, but I think it is very true for the big techs, because Palantir is an emerging big tech. And what people didn't really understand about companies like Google, Apple, Amazon, and so on is these tech companies are structured in a way that if they monopolize the market, the more they grow, the more they can grow furthermore, because they have essentially a data advantage, an ecosystem control. And that's what Palantir is seeking to do. They said, we have no pricing strategy, we capture the whole market. And that's essentially what they are supposed to do, what they can do, and what I think they will eventually do. And the fact that now the valuation is high, combined with also not only the expectations things are improving, but also stuff are really improving, is creating this feedback loop where Palantir is perceived as a leader. Therefore, it facilitates the adoption for new potential clients that maybe are still stuck to that old idea. Oh, Palantir, yeah, the controversial spy company backed by Peter Thiel, who backed Trump. It's like, no. Now we're not talking about that. Now we are talking about a pristine AI company which is growing way more than all the other industry comparable companies, printing a lot of money, which intrinsically means these guys pretend to build AI agents, which is the hottest thing in the market. And their results show that. Is the more they grow, the more they become efficient, and they are quite open into saying, well, essentially what we sell to the clients is actually what also we eat. A very different story from Salesforce. We will sell these AI agents. We could even rename the company to AI Salesforce, Agent Force, and then they need to hire 2,000 salespeople to sell this product. It's like, that's something not really matching up. I remember Amit really underscored this. And if you think of it, it's like there is no real better selling than showing that what you are doing is actually working. Now, a long trip to bring us to what really matters here in terms of valuation, because without this context, we can't really judge Palantir's numbers. Like if I tell you, oh, this company is trading as at more than 60 times revenues, like first reaction, like 99% of the bad value investors out there is like, this stuff is untouchable. Okay. But then you see, okay, but the EV free cash flow is around 150. Like, still untouchable, but it's not that crazy. Yeah. But when you combine it also with, okay, this company is accelerating the growth, they have essentially a notion of opportunity while they're perceived as the leader. And you look at near gardens and you see even the big tech are slow and they haven't a competing product yet, a product that is very hard to manufacture, differently from LLMs. You realize that this monopolization is actually happening, and monopolization means you can still grow very, very fast, very, very long, while also printing money. So with this context, 150x EV free cash flow is still in the high valuation range on my side, but that doesn't mean it is overvalued. We are in a moment right now that if these conditions happen, that Palantir truly monopolizes this space that is so big, so high growth, it is even cheap. So I'm not pretending here, okay, now is a
hold on. So your take, Arnie, is that 110 could be cheap if Palantir capitalizes on the growth. Absolutely.
So that is a big if. So I don't want to be like, oh, we are going straight 100x from here to 17 trillion. Okay, I don't believe that, but I think nobody, even the most bulls, believe that. I say that if this convergence of very positive factors actually happen, I think we can be surprised for a long time. And if this is true, and it is true the condition that the more you grow, the more ripple effects you actually have that lower the friction, the more you can capitalize on this opportunity. Like a simple reasoning, we got up to almost 40% growth, while Palantir's reputation was still relatively bad for many, or non-existent non-existent for many others. Now, Palantir is perceived as a leader, and we got the Dresner ranking again, essentially underscoring for the infinite number of years that Palantir is the top-ranked AI company. But now, this is not seen by 2 people. This is not seen by 10 people, meaning us. It's not seen by 100 people. Right now, Palantir is seen by millions of people. The entire venture capital industry is seeing, the entire corporate world is seeing. When you say Palantir right now, only people that are completely out of finance and tech have not heard that. So that's the level of awareness that we are currently in. And then there is still the big general level of awareness. So this gives me a signal, an awareness that we are still so early. And if the direction keeps improving into this, like if the speed, we are keep going into this direction, it seems expensive, but in reality, it was paradoxically more expensive before that we had the expectations of things improving, rather than now that we are literally in the middle of something that is going very fast. This said, be cautious, because if this doesn't happen, bad things can happen.
Yeah, I think, Arnie, essentially your point is momentum builds momentum. And because momentum builds momentum, Palantir is getting more inbound, they're getting more media coverage, more investors are getting exciting. And although 250 billion is up there, Palantir can capitalize on the growth and the momentum, builds more momentum, then I think we can even see more momentum. I want to go to Matt, your take on valuation. What are you thinking about it right here? And then we'll get into Amir's take as well.
Sure. So I've been a very long Palantir bull for anybody that's been following me on my channel since I bought the direct listing back in 2020. And I think I even let people know prior to the direct listing that I was going to be buying shares. Fortunately enough, on my train back, actually repatriating from Trinidad, from living there and coming back from the pandemic, I was able to buy my first $10,000 worth of Palantir, and I've been a shareholder ever since. Even back then, I touted the fact that I thought Palantir would be a $250 billion plus company. And I was just waiting to understand a little bit more about how the company worked. And since then, I've increased my price target to, in some cases, over $1 trillion, where I think Palantir will eventually go. And I've never wavered from that, even from the past week or so, over the past, when we had the preview on Friday, when we had my article that came out Monday morning, and then also during our earnings call, when we all three of us were chatting, I haven't wavered from that position, and I'm not wavering from it now. I still believe that Palantir has the ability to be a $1 trillion company. My thought process is Amit pulled up the top 40 S&P 500 companies, and it's sitting up there with companies like Chevron, McDonald's, Coca-Cola, many other great American name companies that have helped shape this economy over the past 100 years. And with that, I think Palantir will be recognized as one of those companies going forward that is either on par or if not greater than that, depending upon what ends up happening with respect to revenue growth going into the future. But that being said, and I haven't wavered from that over the past week, and I've felt that way for quite some time. But what I will say is I just think right now, with what we are seeing in terms of valuations for the company, price to earnings ratio now growing over 400x. And while I hear the sentiment around momentum, and while I hear the momentum around the fact that the company has such a great brand, maybe call me conservative, maybe call me an idiot, as some may have said, or lacking forethought. I just don't understand how somebody can potentially purchase stock here. And I think to me, what strikes home was I've been trying to convince several people over the past 4 to 5 years, before the stock hit even 60, 80, or $100. I'm talking when it was in the 6s, when it was in the 10s, when it was in the 20s. Countless amount of people at the office who laughed at me saying, Matt, you're touting this stock that's been down since 2021. Why are you buying it? Now calling me when the stock has hit over $100 a share, saying, I just put $1 million into the stock. And I said, Jesus Christ. To me, after trying to convince people for many, many moons that was a company to invest in, they wait until it's 10x before getting involved. So I can kind of hear what Arnie is saying with respect to maybe it's early, maybe the masses have truly woken up, and coupled with the institutional investors also striving to buy as many shares as they can, you now have the deep depths of all retail investors that didn't necessarily know about the stock and were waiting to buy in to finally buy in. Maybe we do continue to have a blow off and it goes to $125 or $150 a share. But I personally just can't justify it. And I will state, because I think this is something that I had actually a good discussion with Dougie at lunch today, Dougie Dallas. And one of the things I regret, which I actually employed into my investment in Rocket Lab, was one of the things I regret most about my investments in Palantir. I stated I invested during the direct listing, but when it was $10, once we hit the deep trenches of 2022 and 2023, when we were in the single digits, I added a lot, but I never added above 13. My cost basis for all my shares is about $13. I didn't add much in the 20s. I didn't add much in the 30s. I didn't add much in the 40s. And that's a regret of mine. That's something that I recognize that I did not do well when I was investing in Palantir. So I made sure to correct that. The only time I really added above my cost basis of 13 was like right before, I guess it was 2Q or 3Q earnings last year, when we dipped from 30s to the low to mid 20s. And Amit and I were talking, I was like, why wouldn't I buy stock here? And I bought another 500 shares, and happy I did, because that literally, I guess, increased my share count by about 15% or so, or maybe it's closer to 20%. But at the end of the day, I think this is a true value for the American people in terms of what the company provides. I just don't think that the value of the stock matches currently what it should be. I think it should be a little bit cheaper. Maybe that's my bias, because I'd like to buy more. I don't know.
Amir, your thoughts on valuation? Are we potentially cheap here?
I'm gonna give you two sides of the story here. So sorry if I take 2-3 minutes. First of all, I believe the price targets we're seeing are just ridiculous. Now, our friend Mariana, that has been right, Dan Ives, that has been right. Dan Ives doesn't no longer tell us how he reaches the price target. But Mariana came out, she's like, yeah, we're ditching our conventional approach. We're going out to 2035, and if we look at 2035 on this metric, then Palantir is cheap. So here's a new price target. I'm like, 2035? Have you ever heard of any Wall Street analyst going out 10 years and taking, I think it was EBITDA, adjusted operating income, and yeah, we're basing it on this multiple. I can't even recall, and I'm like, what is going on? And but overall, I do agree with Arnie's analysis on how to look at it, especially Palantir's ability to scale with scale, because I think that's often overlooked and hard to conceptualize. But first, Arnie shared some price to sales, some EV sales. Let me just give you the fully updated numbers as of the close yesterday. 98 times price to sales, 599 times price to earnings, and EV to free cash flow, as Arnie said, 150. It's actually 261. So just to lay the bed. But now, let me tell you why I believe a lot of people are going to be wrong. Especially, you can see.
Sorry. You're talking about last 12 months numbers.
Yeah. You're
okay, I'm talking about forward.
Yeah, I figured I should have classified that. But just to set the bed that this is looking expensive, no one can deny that. And even if you take the valuation approach, as we've been talking about on many weeklies now, where we do this reverse DCF exercise, yeah, they need to grow to 100+ billion of revenue in 10 years. And it all seems yeah, how are they going to compound at 45% per year? Just sounds completely crazy. But I'm going to give you a scenario now that doesn't sound crazy. So forget where Palantir is trading now. Let me just ask you, is it reasonable to expect Palantir to grow at 30%? I think most investors, even people who hate Palantir, will agree, yeah, 30% for Palantir for 10 years, reasonable. Like they can achieve that. That's not too crazy. That is 39 billion in 2034. Nothing like outrageous, crazy. Like you can actually defend 30% growth rate. It's less than they're growing now, and it's scaling up. And now, let me tell you, Palantir is worth over $100, growing at 30%. And that might sound crazy, and it is, because the assumption we always have when we value Palantir is that free cash flow to the firm margins are somewhere like 30, 35. It's the base assumption we use in these reverse DCFs. Palantir for 2 quarters in a row has been almost at 60% free cash flow to the firm margins. And if I tell you, will Palantir's margins improve or get worse? Like, can you give me an argument why 60% is not sustainable for Palantir? Keep in mind, they are growing aggressively now. It's not like they are like slowing down growth, focusing on efficiencies. No, they're growing aggressively at more than 30%, and their margins are improving with it, like the free cash flow to the firm margin. So if I tell you, can Palantir grow at 30% for 10 years? Most people would say, yeah, sounds reasonable, nothing crazy. And if I tell you, well, if they just keep their margins they had for the last 2 quarters, they're actually worth over $100 per share, like fair value. And those assumptions aren't completely insane or crazy. That's actually quite reasonable. Now, just conceptualizing like 60% free cash flow to the firm margins, like, nah, that sounds way too high. I'm like, it sounds way too high. They've been doing it for 2 quarters. Why would that slow down? Are you seeing anything? Can you make an argument why their margins would get worse? I can't. Like, super extremely capital light, reinvestment needs are super like low, and operating efficiencies are just going up. Why would the margin slow down? So as long as you make that argument, Palantir is actually worth over $100 per share. Now, let me just put a caveat there. My actual new fair value for Palantir is $66.50, like the way I project it personally. But you can make an argument that they can actually keep 60% margins. And if that's the case, they don't need to grow super crazy 40, 50% compounded, just 30%. If they just keep today's margin, like today, as of the past 2 quarters, if they keep that and grow at 30%, they're worth over $100 per share. It's not that crazy as one might believe initially. So I'm not like, delusional saying that if you just look at the 2 core arguments. But yeah, as I mentioned, in my own personal intrinsic valuation for the business now, it's 66.5 roughly. But you can also make the argument for $100 pretty easily, like without sounding like completely insane. You can make the argument for $100 per share as well. So it's not that absurd as people might think. And even, okay, forget 60% margins. The issue people have with Palantir is that they can't really conceptualize. I think we all make this trap. Like Matt gave an example of last week. I don't think he's alone in that. I'm also guilty of this, where you're like, well, they haven't really done this, so what makes you believe they're gonna do it now? Like if you go back to a year and a half ago, when they were growing 13% year over year, if I told you, no, Palantir is actually going to approach 40% in a year, you're like, well, how are they going to do that? Like, you can't conceptualize it. But keep in mind, Palantir, relatively speaking, they're very young. They haven't captured a lot of market. They have like less than 1,000 customers. And this is for a business that can address like literally every industry that exists in the world, both on the commercial enterprise side, but also on the government side. Like for any industry, any kind of business, any business model, they can actually be implemented. And when you shift the conversation to that, it's very hard to conceptualize, because like oh, we haven't seen that before. How do you like put that into numbers? So it makes it very difficult. And I think Tesla suffers from this too. Like people make this argument about autonomy robotics, and people are like, well, they are actually slowing down car sales. I'm like, well, what's the potential here? Like, it's hard to visualize and conceptualize when you don't have it actually happening. That's why it's easy to come now after the fact. After the fact that Palantir grew 36%, you're like, yeah, okay, seems reasonable. They can do that. I'm like, yeah, but would you say that a year and a half ago? Probably not. So I think we still need to understand Palantir deeper. Like, even though we've tracked this company, we talk about it every week, I still think there's a lot of unknowns, a lot of things we don't understand. So I personally try to leave a lot of room for error. Like, I will add more risk to my valuations to account for that. Like, I don't understand everything about this business, and I can't really know what it's going to look like in 10 years when they capture like larger parts of the time, especially as Arnie mentioned, like this company grows faster from growth. Like, just that like compounding effect on itself is just so crazy with Palantir. But to answer the question again simply, according to my fair value, yeah, Palantir is overvalued here. In terms of expensive, looking at multiples, forget about it. It's not even close. Like, we're talking like 100 times price to sales, stuff like that. Forget about it. It's super expensive. But you can make a plausible argument from a valuation perspective that Palantir is worth $100 per share by just assuming 30% growth and historical, like, this is not made up, historical free cash flow to the firm margins.
It's a fair point. It is at least a scenario to kind of come up with a conclusion for how we get to that, how we get to the current price today. Here's another question I want to pose to the panel. Do you think there's a level of FOMO going on? And do you think that FOMO is institutional, or do you think it's retail?
I think a little bit of both, but with a big but. I think what is truly moving the price is not retail buying, because I really appreciated that in your last, I don't remember if it was market open, market close, but you showed that, for instance, on Robinhood, which has Palantir among the most traded held stocks. You showed essentially a chart that retail investors from Robinhood are actually net sellers of the stock. So this obviously is Robinhood specific, but I think Robinhood is a good proxy into, apart from that last boom, but is a good proxy of the retail momentum sentiment. It's a good proxy. Okay. And meanwhile, we know institutional investors are loading up. And the fact that, as you showed previously, we got so many analyst updates, it's a hint to me that many institutional investors are now more relaxed into putting money into this company. Like, imagine if even Rishi, who got it so wrong, went from 4 to 40, it means that 40 right now would be like already an insane bargain. So personally, I disagree with you, Amir, around the 60 range, already based on this simple observation. Obviously, I need to get deeper into make sense or not. But personally, if you give me right now, as of today, as we are in this point of the story, something around 60, I would be very happy to load up. So is not a price that I would see as fair. Is more a price that I would see, whoa, give me that, and I'm happy to load again more. And we know, like, the fact that now analysts are more open to Palantir. They increased their price targets. There is more research aware. You see on CNBC, the narrative is actually positive. Institutional investors in the aggregate tend to be ships. So even if taken individually, they tend to be smart people, in aggregate, their behavior is really like a herd. And now everybody's rushing towards Palantir. The NVIDIA story right now is a bit weaker. And I personally believe a lot of money that was into this hardware AI sector is now flowing towards applications. So read Palantir, because if you look left and right, you essentially have no other good place where to put your money. Says ServiceNow is okay. Like they try to push the narrative of AI, but it's not truly working. It's like they pretend we are an AI company, blah blah blah. But when you look at the results, they're still good, but they are as good as they previously were. It's not that you are seeing a transformation, how we were speaking before, like Palantir. The proof that their own stuff work, that their AI works, is in the numbers. They're growing more, they're spending less while dominating the market. So this triggers a lot of institutional interest, and you have no alternatives in the S&P 500, which intrinsically means if you actually want a pure AI software play, as we were talking already since last year, since Palantir entered the S&P 500, there is no alternative. Well, what happens when you have high demand and no alternative? All the money flows into one thing. And that's exactly what I think is happening. And personally, I'm happy because we were discussing this dynamic months ago, and we got it right.
I would agree. 2 super chats right here. Let me read them here. Rob, thank you for the $10 super chat. Amir, you killed it last time when you said we were in chapter 4 of a 40-chapter book because Palantir is young in terms of growth. I would agree. That was a great analogy. And then Rob, thank you again. Very, very generous $200 super chat. Admit, last year I gifted you when I became a millionaire. This year I'm now a multimillionaire. I started watching your videos a year ago on Palantir and decided to go all in because of it. We'll continue to DCA for the next 5 years. And I think that super chat proves Arnie's point as well about retail, which is that although there are some retail investors that are selling, taking profits, and they deserve to, there's a lot of people like Rob that are holding on. And if they're holding on and they've, reached multi-millionaire status because of it, and they have, they say don't get emotional with your stocks, but there's obviously an emotional attachment to the company and just the growth trajectory and what you think about CARP, and you're not selling. The big boys that want to be part of the story because Bank of America and UBS and DA Davidson say, hey, it's not worth 20 anymore, it's worth 115. They have to start buying. And if there's more buyers than sellers, you tend to get a little bit more buying pressure, even with the dilution. And then boom, you get a stock price that's here at $110.
I'm sorry. And there is a lot of retail. So what Brett was hinting, but there are 50% of retail holdings still. Well, if this
that's the Colt, baby. The Colt's not selling.
So if these retail people actually have the confidence that, wait a second, yes, the stock may look expensive, but there is a very strong tailwind here. The company is executing perfectly. Personally, I've never seen the company so aligned, so motivated, so happy to be there, while potentially, like, they could go all retire up to now. Like, think of it. All the management, they don't really need to keep grinding their ass off. They could be on taking the sun all day, but they are there for the mission. So if retail, this 50% is actually convinced, okay, I can take some profits to secure my financial position, but I'm happy to be invested here. You have a lot of buying pressure on one side, and on the other side, you have a supply that is not really willing to become the supply for these guys. So in order to make these other guys sell, they need to require a very, very high price.
And another good point about this is someone like Rob, I would imagine if Palantir did have a dramatic decline, he probably feels like he doesn't have enough shares, like all of us do now. Now that we've seen the growth, right? Once you've seen the growth, now it's like, okay, if you get a dip opportunity, you want to get back in and increase your position. So a lot of retail that I've spoken to, A, is not selling. B, if there's a dip, a lot of them are like, dude, I don't care. I'm happy to get more shares at this point, right? We kind of know it's extended. And if it comes down, I am totally fine holding on to my position. And that's what happens when you create a real cult investor base that actually gives a shit about you. There's not GameStop, AMC, where it's just like nonsense. It's something real. And because of that, it's going to be really hard for the big boys to get this as cheap as they want to get it. Chad right here says the waiter at lunch yesterday was a shareholder since $20.
Wow.
I mean, Chad met someone at lunch yesterday who told him, hey, I'm a shareholder at Palantir. He probably saw a Palantir logo on Chad's shirt or something. and because Chad works at Palantir, for those that don't know, and he's a shareholder since 20. I mean, the fact that a waiter can come up to you at lunch and say, "Oh, do you work at Palantir? I've been buying it since $20." Insane. And I think that's only going to compound more and more as Karp has his book go on tour, right? He's probably going to go on a book tour and start talking even more about the Palantir thesis.
And guys, let's be honest. How often have you wore the Palantir merch and someone stopped you around? Like, so far, it hasn't happened to me yet. But the moment it will start happening, it means that we are like at a very high level of awareness if that happens here in Italy. Imagine when it will happen multiple times, we know that, okay, now Palantir is a global phenomenon. It's still early.
Most of the time when I wear it to the office, people ask why I'm still working here. They're like, you still work here? Like, because I moved teams. So I used to work in the Gulf of America assets in UDOC, and now I work more global, all to say. And so with that, I sit on more of like a financial floor. So it's a little bit different of a crowd than I was used to. And so I'll wear the hats, and then I'll see people like getting coffee or going to lunch, or like, thought you quit. Like, thought you know, why are you still here? But it's about the long term, right? It's about investing in things that you believe in. And, you know, if it was really just about getting to a couple $1 million, I don't think a lot of us would be here, right? I think a lot of us believe in investing in great companies that are going to benefit the future of America. And, you know, it's going to be interesting to see where it goes from here, especially knowing that now a lot of people are really focusing on putting America first, it seems like, again, which will be nice to see how that kind of goes. And yeah, really cool to see Palantir amongst some of the greatest companies that we've seen in the American economy. And really looking forward to see what they do next.
I forgot why I shared. What was the question?
The question was, do you think there's institutional FOMO? But you can talk about something else too, if you want.
Yeah, no, yeah, sure. So if it's retail, you know what? This is like not a criticism. I think it's just like reflects reality. As you shown on the Robinhood app, I don't believe it's so much retail being FOMO here. You can share that. I will, like, you can bring it up. So I believe that most retail are heavily influenced by content creators. And the reason I say this, I made this like YouTube series where I review portfolios, and after like 20-30 portfolios in, I'm like, this is all the same portfolio. It's like Jeremy Financial Education's portfolio, like duplicated 10 times, or you will see whatever Amit is talking about duplicated like 10 times. So believe it or not, like, this reflects reality that a lot of retail just echo whatever their favorite content creator is doing. And that might be like positive or not so positive. I'm not sure. But the reality is that the Robinhood app shows it. And most content creators now, even Palantir bulls, they are not really saying that, oh, this is such an opportunity now. But still, the price keeps going up, even though retail is like net outflow. So the reason I think it's mainly institution is, one, this is the revision of consensus estimates from Wall Street in at the change of one quarter. Now, keep in mind, after 2027, this is all just one analyst, but that doesn't matter in this context, because what people do on an institutional level, they will load up their like Bloomberg terminals, their Capital IQ, their whatever it is, FactSet, and they will look at estimates. They won't really care how many analysts there are, and they will see like, oh, 40 billion in 10 years. I actually, just for reference, that 40 billion is more than I have Palantir doing in 2034. So suddenly, Palantir is a lot more bullish than me going out to 2034. But you can see that a lot is changing like exponentially. And when people see that, it tells this narrative that, oh my God, people, stuff are accelerating here. So I truly believe that Palantir felt that they missed out. Sorry, did I say Palantir? Institutionals felt that they have missed out. They see this crazy growth, these new crazy estimates that are like more than double what they used to be in their terminals and stuff like that. And I think there's just a lot of hype around the name. So I don't believe it's retail. I haven't seen anyone actively try to like make a case for Palantir. at $100, like among the content creators, even among those that are saying Palantir 100x, 1000x, 10,000x daily, even they're not saying like, yeah, this is a generational opportunity at 100 currently, like today. So I don't believe it's retail, and that's reflected in the Robinhood net outflow. So I believe this is purely institutionals having to get in at an extreme premium because they missed the boat, and that's the way the world should work. If you are late, you should be prepared to pay a premium to hold a high quality fortress kind of like business. So yeah, you could say karma. I'm not sure how, but the question then becomes, okay, how long is this sustainable? Because at the end of the day, I shared a scenario just recently where like, yeah, they just need to grow at 30% and 60% free cash flow to the firm margins, and it's worth 100. No one is doing that now. People are doing what Arnie was doing. They're looking at forward multiples. They're looking at that close to 100 times price to sales. They're looking at that 600 price to earnings. So it makes you believe like, oh, how long is this truly sustainable? How long can the hype and momentum keep going? They just reported numbers. They blew it out of the water. How long before they forget? How long until the next thing that they want to move capital to? So I'm not sure. I don't really track charts. I don't track stock quotes. So I don't know. But yeah, it's definitely institutionals following here, if I would have to guess.
I think that chart is so beautiful because it encapsulates essentially the asymmetry that we noticed, but Wall Street was not noticing, not paying attention on. We realized when we were looking at those estimates, that old estimates, that wait a second, these estimates don't really make sense. If the AI software market is expected to grow around 20%, and analysts were expecting Palantir to grow essentially in line or even less than the market, it means that Palantir is expecting to lose market share. While all the points that we are seeing from being obsessive on the company point towards Palantir getting ground. So that was the premise that made us see something that institutional investors were not paying, because institutional investors, not all of them, fortunately, I would say the smart ones, they like only the smart ones are actually learning to appreciate also us. But the traditional finance guy is the one that until something goes on Bloomberg is not true. Until something is said by an analyst is not true. It means that they don't really have the analysis skill to digest what is real, what is not, what is the skill, where is not. So this brings us to the dynamic where many institutional investors are allowed to deploy money only when there are some analysts that agree on that, for two dimensions, I would say. One, they're not really able to analyze things, so they depend on external analysts, which unfortunately completely missed the boats, apart from two beautiful exceptions, and us. And the second dynamic is something similar to what you saw with ESG. What happened with ESG was once a company was rated badly on the ESG score, people were not really willing to deploy money into that. But when the ESG ratings were high, the floodgates were open and a lot of money were flowing into those companies. Names, as institutional investors call them. And once Palantir becomes a name that can attract also institutional investors, that triggers a lot of money flowing into this company name. So that's the effect of analysts becoming more positive. Institutional investors see this rise in expectations. Now they are politically allowed to invest into this company, because if let's put you are a fund manager. If you're right, you make good money. If you're wrong, you can blame the analyst. Oh, you provided me a bad service. So this helps. Okay, I have a portfolio to allocate. I'm confident into buying Palantir at all-time high, because the risk of missing that is higher than the risk of potentially blaming an analyst because he told me bullshit. And that's the dynamic I think is happening right now.
I'm gonna let Matt give his thought, but I just wanna pose a question here. Of course, Marianne and Dan Ives have been correct. They've like ever since the 20s, they've been way ahead of the curve of the stock price. And I believe that Palantir will have a correction. But I'm curious, do you guys believe that they will backpedal on their targets? Like 120 plus if Palantir drops back to 70? Let's say like hypothetical. I'm not saying it will, but do you like Mariana's like her justification is like EBITDA 2035? Like, do you believe that they will backpedal those price targets if the price activity doesn't reflect going towards that? I'm really curious what they will do if I'm not saying this will happen, but if Palantir loses this momentum that it's had for like a year straight, what will they do with their price targets? I'm kind of curious if you guys believe that they will backpedal those.
I don't think they would. I think they'd probably be happy because then they wouldn't have to raise it to 150. Then as soon as it keeps running, they think it would give it a little bit of time to grow into it. So I think most of the analysts are going to keep their price targets unless Palantir messes up a future earnings. We would see downgrades. If we don't see Palantir messing it up, but we see a general market correction or maybe even a Palantir correction, then I think they're probably going to be fine with that because they expect it to grow into it over time. One thing on the institutional argument is that I definitely don't think this is GameStop. I know a lot of people have been saying that they think it's GameStop. GameStop was retail trying to prove something to hedge funds that were net short GameStop, like short by like over 100%, right? Like some ridiculous, they were shorting on margin. It was just crazy what was happening. This is not happening with Palantir. Palantir is less than 5% short. Retail loves Palantir, but retail is not trying to stick it to the hedge funds. We're just trying to, believe in Karp and his mission. And so from that perspective, I do think it's more institutional FOMO than not, given retail doesn't have this like motive to keep buying Palantir to squeeze the shorts because that's not happening. Matt, do you think there is institutional FOMO going on or more retail FOMO at these prices?
I think so. Yeah, I think it's mostly been retail, and then coupling that with there are a few folks that are struggling in. Like I noted that person that I've been trying to chat about for many, many moons, over a year, probably close to 2 years. But they finally said, I'm selling this individual stock to buy into Palantir, and I'm like I literally have been telling you about this company forever, and now you want to get in. You could have made 10x your money since I started telling you about it, but I think what it is there's a lot of demand, a lot of heat coming into the stock. I think before it was very irregular in terms of seeing over $20 million 20 million shares of volume. And now we're seeing upwards of 90 or 100 on a pretty regular basis. And so with that, it just goes to show you that there's a lot of shares trading hands on a regular basis. It's almost 4% of the float on a daily basis where people are trying to convince or entice others that are holding the stock to sell. And I think that there's just not enough supply. And so with that, they have to raise the price and go higher to entice somebody to say, you know what, $110 is finally where I'm going to sell. I've made 10x my money. I'm ready to let it go. And, I'm sure that there's some people out there, but that are retail that are getting in, but I think it's more along the lines of the institutions. I'm very curious to see once we get to a 70% or so institutional ownership, if the stock settles down a little bit and maybe consolidates. That I don't know. I've never really done any back-end analytics, and I'm sure Arnie and Amir, who are much better about that sort of stuff than I am. I'm just a fucking guy in an office somewhere in Houston. I don't really know anything about anything. These guys are the ones that are smart. So I'm sure within a couple months, they'll be able to tell us very much how Arnie did a really good job kind of explaining once we enter the S&P 500, what kind of expectations we might be able to anticipate. I'm sure he's got some research that shows once you get to a certain level, institutional ownership, it kind of levels off, right? And I'm curious what ends up getting us there, right? Last I checked, we were at 50-odd%, but most companies that are specifically this high within the S&P 500 I see are probably anywhere between 70 to 80% institutional ownership. So once we get to that point, will it kind of settle down? I don't have the answer, but that's just initially my thoughts.
I'd like to show you this peculiar chart showing how the analyst expectations in aggregate, what is here the violet line, objective de course. I don't know why it became in French, but you can see that as long as the growth estimates are positive or improving, analysts can sustain or increase the stock price. What happened in 2022 was the growth was slowing down, bringing also the valuations down, combined also with higher interest rates, which increased the discount rate and so on. But that was the key dynamic. As Palantir started to accelerate, printing more money, then analysts became more positive, but they were quite skeptical, especially in the latest quarter, where there was a huge discrepancy between what the price was saying, around 75, and what analysts in aggregate were saying, okay, this company is worth less than 50. But look at now, like now you see the analyst being super happy to raise in aggregate the stock price already in the 80s, which is like saying, okay, we think in aggregate Palantir is worth at least this $80. The dynamic changed completely, and I think since analysts don't talk to retail, their clients are not retail, their clients are institutional money, so hedge funds, big funds, and so on, that want research, want confidence into one company so that they can execute the trade with the bank. This is why they are the floodgate I was discussing before to the institutional money. And the fact we are seeing this huge spike from less than 50 to almost 80, I believe it's there. That's to me the signal, okay, institutional money is loading up here.
All right. There we go. That is it for the Palantir Q4 2024 earnings recap. It has been an incredible week. Again, congrats to everyone who's been on this journey for a long time. Congrats to everyone on the gains. Life-changing amounts of money this week because of Carp and the company's execution. And it's been a fun ride, which might be just beginning, quite frankly. It really might just be just beginning right now.
We've only just begun
There's this great
to
CEO that has,
live. Sorry.
I
No,
personally didn't expect this $100 could for real be a
Dude,
starting
we
point.
were planning Vegas for 100. We were gonna like actually set something up, and then within, I don't know what, 30 minutes after the earnings call, triple digits, and it hasn't.
Literally,
gone
like
back.
what was expected to be the goal now feels like, okay, that's the start.
you know, Amit has promised a trip to Europe 2025. Now he can definitely afford it after hitting $100. So see you soon, Amit. And as for just beginning, perhaps there's this great CEO that has been saying that for a couple of quarters now, that this is just the beginning. So I don't know. He has been pretty correct. Also, we kind of missed it, but if you want to show that clip, I think Arnie posted a very short shorts.
Yeah.
If you just want to play that as an outro, the CNBC clip that we were talking about in the beginning. But yeah, it might I truly believe it's just the beginning.
It feels like we are actually just beginning, and this could be a truly, truly incredible journey, and it already has been for the past couple of years. Here is Carp 2 years ago talking about the analyst.
Morgan Stanley, an analyst there, that questioned whether Palantir should actually be valued as a true software company or a consulting firm.
It's complete idiocy. I know what they're going to say in 2 years. Palantir focused on building high quality revenue. 60% of it comes from the only source that isn't going to go away. They make free cash flow off of that, and they've delivered 5 of the most interesting products in the world. They will then be writing about Apollo and our stuff on the edge and the military stuff we can't talk about, and our revenues will have increased. And in the end, it's a multiple on revenue. That's what they're going to write.
Morgan Stanley, an analyst there, that
But it's not the same clip that we were talking about. I think maybe you cut it out when he says like, "Why should I care what they're saying now? I know what they're gonna be saying in 2 years." But yeah, also a great clip.
Let's try to find that.
Yes, someone knows in the chat. Like there are some people that are like locked in, like they find that stuff immediately. So I'm sure there will be some comments in the comment section.
At the end of the day, Palantir is
Powerful as fuck.
oh That's it. Thank you, everybody. We
Somewhat.
will see you next week on Palantir Weekly. Bye, everyone.
Bye,
Have a good
everyone.
one.
Thank you.
Bye.